What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. So I'm going to reveal to you my IRA. I'm very excited to reveal you the IRA. It's done extremely well. My philosophy is to invest in stocks or ETFs that keep in line with the S&P 500 or beat the S&P 500. I'm going to max this out this year. I thought about rolling over an IRA. I will just throw over my Travel Nurse IRA 100% into SCHG in my other IRA. But this one, I'm going to load up until I retire pretty much. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my IRA right now. So one of the first stocks that I own and I've been buying shares of in my IRA, I've been nicking it a little bit, but this one's going to be probably a permanent one. Tesla, sitting at 337.80. Its PE ratio is 165.73. The average volume is 73.35. The market cap is 1.06 trillion US dollars. Elon Musk, and he has stated, and I've seen this before, and you can correct me if I'm wrong, he thinks that they can get to a $10 trillion company, their market cap. So now I'm going to buy, invest, reinvest dividends from other stuff, hopefully into Tesla as well to buy more shares. Day range is 334 to 354.98. Previous close is 354.40. So let's look at a few things with Tesla. So a few things I'm going to point out. And I know, they're still kind of a new kid on the block. I would consider them a new kid on the block. And they're starting to get built more powerful, more stronger. And there's a reason why I have TSLP in my dividend portfolio because it kind of follows Tesla. And the other thing is people are kind of upset with TSLY dropping significantly, but they do synthetic calls. The stock has done phenomenal. So annually in millions US dollars, this is the one thing I want to see with Tesla is revenue trends. They're still kind of new. I'd still consider them new. So annually in millions US dollars, 31,536, 2021, 53,823, 2022, 81,462, 2023, 96,773, and 2024, 97,690. Getting very innovative, and it's not just cars. They have a lot of things going for them. Revenue trends seem to be pretty solid. I think, Elon Musk is very innovative and very sharp. He adapts very well, and he's doing really well with X. So I have confidence in this guy. I don't know if I have confidence in his taste in women, but he is doing a tremendous job with Tesla. So that's one thing that I have added to my M1 Finance portfolio is Tesla, and I started buying shares of them. I'm going to jump to the next stock. One I'm going to point out is Amazon, sitting at 216.58. It has a PE ratio of 39.9 currently. Average volume 35.16 million. Market cap is 2.28 trillion US dollars. Many people predict this might be the one that is the first $10 trillion company. Year range is 151.61 to 242.52. Day range is 214.74 to 223.31. Previous close is 222.88. So in the past 5 years, it's done incredible. It's still growing. Its price per share has increased over time and has done well against the S&P 500. I'm going to jump to some recent earnings reports. So everything's like in the positives. Here's March 2024. Okay, revenue is up 12.53%. Can you imagine that? 143.31 billion. And guess what? They pay rent to some of the landlords like the industrial REITs, which I really like. This is March 2024. Net income was up 228.85%. It was 10.43 billion. Diluted earnings per share 216.13%. Net profit margin was up 192.37%. That was at 7.28%. June, revenue was up 147.98 billion. Net income was at 134 point, was it 13.48 billion. It was 99.78. It was up. Diluted earnings per share was 1.26. That was up 93.65. Net profit margin is at 9.11%. That was up 81.47. Then you look at September. Revenue was up 158.88 billion. That was up 11.04%. Net income was at 55.16%. So that is done significantly higher still. Diluted earnings per share 1.43. That was up 52.13%. The net profit margin was 9.65%. That was up 39.86%. Then we go to December. Revenue was 187.79 billion. That was up 10.49%. The net income was 20 billion. That was up 88.29%. The diluted earnings per share 1.86, 84.16%. It was up. Net profit margin 10.65. That was up 70.4%. Operating income 21.2 billion. That was up 60.52%. That has increased significantly. It is done. It's keeping up or it's beating the S&P 500. That is quite impressive. So that's why I have Amazon in one of my pies for M1 Finance. Let's jump to the next stock. Next stock I have is Apple sitting at 245.55 or $245.55. In the past 5 years, it has destroyed the S&P. It's been up 213.76%. The S&P 500 was up 80.16%. Its dividend yield is 0.41%, so they are distributing a dividend. They have a significant stock split history as well. Their PE ratio is 39.04. The average volume is 54.22 million. The market cap is 3.69 trillion US dollars. Year range is 164.08 to 260.09. Its day range is 245.22 to 248.69. Previous close is 245.83. So we have some very good numbers that are attractive from Apple. And because of that, myself as a dividend investor, I like the dividend growth. I will show you the dividend growth as well, but I'll show you some recent trends. So here's its revenue. It was up 3.95%. It was 124.3 billion. That's a lot of money still. Net income 36.33 billion. That was up 7.12%. Diluted earnings per share 2.4. That was up 10.09%. Net profit margin 29.23%. That was up 3.07%. The operating income was 42.83 billion. That was up 6.09%. You're seeing some really good numbers. And you have Apple Watch, Apple Pay, you have all these apps with Apple. They have done it extremely well. Everybody pretty much uses an Apple cell phone, so they're not going anywhere. They're adapting, and the demand is high for Apple products. Now I'm going to jump to the dividend history because it is a dividend stock as well. So I'm going to show you 2016. It was 57 cents, 2017 63 cents, 2018 73 cents, 2019 77 cents, and then 2020 82 cents, and then you see the stock split, 21 cents, 22 cents, 23 cents. And then you have 17 cents right there, which is kind of like a little bit of a surprise, but at the same time, look at 23 cents, 24 cents, 25 cents. So look at that low payout ratio. They actually help us as dividend investors because low payout ratio, dividend growth, sure, in 5 years was 4.89%. But hey, the board of directors said, hey, we need to focus on growth. That's fine because I want the Apple to beat the S&P 500. I want it to grow because I want to increase my net worth with an IRA. I usually don't focus on dividend stocks in the IRA. The number of dividend increases in the last 5 years is 6. If you bought one share, you made $1 with a 0.41% dividend yield. 0.41, no wonder why I don't have it in my dividend portfolio. I like dividend growth, some of the high yielders that have significant dividend growth. Let's jump to the next stock. Surprise, Microsoft. Not a shocker at all for me to have it in there. Sitting at 408.29, I actually have Microsoft in my dividend portfolio. Dividend yield is 0.81%. PE ratio of 32.89. The average volume is 22.80 million. Market cap is 3.04 trillion US dollars. The year range is 385.58 to 468.35. Day range is 407.89 to 418.05. Previous close is 416.13. So look at that. Past 5 years, it's killed the S&P 500, 128.62 to 80.16%. So really like Microsoft. It's doing very well. And of course, the products are good. Revenue trends are good, which I'll show you the most recent trend. Most recent in December 2024, the revenue was 69.63 billion. That's high. So that was up 12.27%. The operating expense 16.18 billion. That was up 5.30%. Net income was up 10.23%. That was at 24.11 billion. The net profit margin a bit down, 1.82%, but still pretty solid, 34.62. Earnings per share 3.23. That was up 10.24%. And this is really good. EBITDA, you should look that up. I don't want to go in depth with you guys to fry your brains, but it was 38.48. That was up 16.64%. Now, of course, since Microsoft has a dividend, let's jump to their dividend history. The reason why I like Microsoft in my dividend portfolio and my IRA. So one thing is, if you look at 2015, 36 cents to 36 cents, and then 2016, 39 cents to 42 cents, 2018, 46 cents, 2019, 51 cents, 2020, 56 cents, 2021, 62 cents, 2022, 68 cents, 2023, 75 cents, 2024, 83 cents. So look at that, good payout ratio. So look, I like it. My IRA, it's beating the S&P 500 and or it's keeping in line with the S&P 500. Good payout ratio at 27%. Number of dividend increases last 5 years is 5. Dividend growth in 5 years is 10.25%. You bought one share, you made 332 with a 0.80% dividend yield. I like it. This is a good one. This is why I have them both in my dividend portfolio and in my IRA. So now we have an ETF to look at. I like it. Now I'm going to go a little bit in depth with them. The Fidelity MSCI Information Technology Index ETF, sitting at 185.65. Beating the S&P 500 is 80.16. And this one was up 137.07%. So I like tech. It's a pretty good ETF with tech, and we're going to look at it. All right, so let's look at a few of these. What's inside of it first. So Apple 16.27, Nvidia 13.95, Microsoft 12.83, Broadcom 5.45%, Salesforce 1.98, Oracle 1.71, Cisco we have 1.47, IBM 1.46, and I just want to make sure that I point out Palantir is 1.05%. Texas Instruments is in there. It's 1.04. So it's down by 0.01 to the Palantir. So there's a high percentage or focus with Palantir. I would consider that. So that's one good thing. Palantir has been blowing up like crazy. Also has a little bit of Micron technology, Palo Alto, Intel. Hopefully Intel wakes up. MicroStrategy, MSTR. The other thing is MSTY's starting to look a little bit down. So just keep an eye on that. YieldMax investors. So let's look a little bit more into them as well. Expense ratio and dividend history. So the one thing to keep an eye on is the gross expense ratio. Okay, 0.084%. So that's one good thing. Let's see a few more things on them. So another thing I wanted to show you that I really liked on them. Let me find it. Past 10 years, okay, so here's the thing. They seek to provide investment returns that correspond before fees and expenses, generally of the performance of the MSCI USA IMI Information Technology Index, investing at least 80% of all of its assets and security in the fund's underlying index. So that's one thing. So it's mostly all United States, 99.12%. So I'm going to jump to one more thing. Dividend growth is a little slow. So 2016, I mean, you're getting like 10 cents, 11 cents. And then you go to 2020, 18 cents, 2022, 21 cents, 22 cents. You're still a little bit at 21 cents, 22 cents. So you got a dividend yield of 0.44%. So not the best, but again, you get enough shares, you start buying more shares, it compounds. That's a good thing. So again, I'm doing this for the net worth, net asset value. Would I have this in the dividend portfolio? Probably not. So I'm going to jump to another ETF that I own, which is SPLG. So you got SPY, you got SPLG, you got Vanguard VOO. This is sitting at 70.59. So literally, it's right in line with the S&P, a little neck and neck, up and down. So that's one to keep an eye on. SPLG. I am buying shares of them, and I believe that there should be balance. I should have some tech, have the S&P 500. I should have another ETF, which I'll go over, but I want to show you something that's very nice with SPLG. Yes, its expense ratio is 0.02%. That is a very low expense ratio versus SPY, and I'm pretty sure SPY is 0.09%. So just be aware of that. Let me jump to the next ETF. And I actually want to show you SCHG and why I like it better than SCHD. So I'm going to have the link in it below because I went very in depth with SCHG. I absolutely love this ETF. It might be my favorite ETF out of all of them. And I went big time in depth. I want you to check that one out. This one, I'm telling you, I have over $70,000 in SCHG, and I provide my rationales as to why I bought them. Next is Google, GOOGL, Alphabet Inc. Class A, sitting at 179.66. It has done extremely well against the S&P 500. Actually has a dividend yield of 0.45%. It has a PE ratio of 23.26. The average volume is 27.69 million. The market cap is 2.21 trillion US dollars. Its year range is 130.67 to 207.05. Day range is 179.08 to 185.34. Previous close is 184.56. So it has done significantly well. And guess what? I get paid by Google because I'm a YouTuber. I don't give financial advice, of course. So their earnings have been very strong. So let's jump to that. Already you see their numbers. This is just annually revenue jumping up, which I like. Their revenue in 2024 annually 350.02 billion US dollars. It's year change 13.87%. The operating expense 89.53 billion. That was down 0.27%. Net income was 100.12 billion. That was at 35.67%. Net profit margin 28.60. It was up 19.12%. Earnings per share 8.04. It was up 38.62%. EBITDA that was up 34.56%. That was at 129.50 billion US dollars. And guess what? I'm on Google Finance doing references for stuff. So Google's in demand, Microsoft's in demand. Okay, you got Apple's in demand. Tesla probably will be in demand, getting there. So that's kind of my wild card one. But I'm going to jump to the dividend history because it does have a dividend. And it just started at 20 cents. So looking at this on Zacks, payout ratio is 10%. So if you bought one share, you made 80 cents of the 0.43% dividend yield. Hey, they just started a dividend. Here's that they're doing pretty well. And let's jump to the final dividend stock, or stock, if you want to say. This is my favorite, NVIDIA, sitting at 134.40. Its dividend yield is 0.03%. PE ratio is 52.96. The demand for chips are getting crazy. Okay, so they're just going to blow up even more. The average volume is 270.26 million. The market cap is 3.29 trillion. Year range is 66.25 to 153.13. Day range is 134.03 to 141.46. Previous close is 140.11. So look at their most recent trends, then we'll jump to their dividend. I'm going to jump to annual revenue, 60.92 billion. That was up 125.85%. The operating expense, 11.33 billion. That was up 15.85%. Net income was 29.76 billion. That was up 581.32%. Net profit margin, 48.85. That was up 201.73%. Earnings per share was 1.30. That was up 288.02%. EBITDA, 34.48. That was up 384.20%. And I'm going to jump to the dividend history. You'll see some stock splits. So 2019, it was 16 cents. And then 2021, it was 4 cents. And then it dropped down to 1 cent. That was with the stock split. So payout ratio is 2%. That's quite impressive per Zacks. Dividend growth in 5 years, 10.43%. If you bought one share, you made 4 cents with a 0.03% dividend yield. I just want to be very clear with you. Again, you can consider it a dividend stock, but I see dividend growth. Its dividend growth is pretty strong, like Microsoft, but I'm doing it for, selling it, selling shares for a profit in the long term and retiring with a good IRA, hopefully 400,000, 500,000, and then the other one, SCHG, just takes off over there. So, and then my next traditional IRA with my other job, does well. So we'll see what happens with that. Now let's jump to M1 Finance. So there you have it with my IRA. So it's at $24,665.58. Just started buying Tesla. Just started buying Microsoft. Just started buying Google. Just started buying Amazon. Added SCHG. I may put the percentage a little bit down, maybe to 10%. Add a little bit more Amazon in there for the higher percentage. FTEC, I have it at 12%. I like the tech going up. SPLG at 12%. I may put that a little bit down and focus on some of the techs. Apple, 12%. NVIDIA, I just threw it at 1% because I loaded up on it and I need to buy other stuff. I made like throw in 1,000 that, for 1 year, and then 6,000 in the other ones. So I got a little bit of catching up to do with that one with NVIDIA, but the pie, kind of has it there. But again, I like the amount of shares I have with NVIDIA right now. I'm really happy with that. I have a few, like I said, I have a few IRAs, but this is my, this is one that I'm going to load up on. Let's see, how many shares do I have? I have 166 shares of NVIDIA, so I just want to show you that. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. I hope you enjoyed my video for my IRA. It was a long video. Take care and have a good one. I'm going to jump to my disclaimer. And by the way, I will have that link in the comment section below with SCHG. And I will also have a link to my IRA if you want to sign up for M1 Finance. We both get a commission. So I just want to be honest with you with that. And double check, because I think once you reach $10,000, you do not have to pay a fee whatsoever with investing in M1 Finance. So take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, can lose money. So be aware and do your due diligence. Go find a financial advisor for financial advice and a tax advisor for tax advice. This is why you need to go to a financial advisor. You can lose money investing in the stock market, so be aware and do your due diligence, please. Thank you and have a good one.